Hey guys, welcome back. So in this video we are going to discuss about the supply and demand zones, and we are going to discuss that in detail and learn how you can detect supply and demand zones in your forex charts. So in forex or even in stocks, there are basically two states of the price movement. The movement can either be balanced or unbalanced. So let me show you by example what I mean. So in a balanced movement, what happens is the price moves sideways. As you can see here, the price goes up, then goes down, and then goes up, then goes down. But in an unbalanced state, what happens is either the price moves, tanks a lot, and goes down and keeps going down, or the price starts moving up and keeps moving up. So the candles, most of the candles that you will see in unbalanced state will either be bearish dominant or bullish dominant. So here it's like bullish dominant, and here it's bearish dominant. So like there are two states. The first one is balanced state and the other one is unbalanced state, where there's a lot of movement of price. The price movement can either be upward or downward. So let me try to explain about how zones are created. So in any zone that you see here or here, there will always be two big candles and one or more than one base candles in the middle. So here these are two big candles, and right there is one base candle. So this supply zone is a rally base drop. So what is happening here is the market is bullish, okay, and then the market is stable or balanced in the middle, and then the market drops, the price drops. So here you can see the bullish trend, then like it goes sideways, and then there's bearish trend. So what happened here was that there was enough supply that it let the sellers take control of the market, because like when the price is moving up and candle is bullish, the buyers are in control. But when the price is moving down and the people are selling, the sellers are in control. So here a supply zone is created because there is one bullish candle, then there is base candle, and then there is one bearish candle. So here this zone which is created between these two candles is basically a supply zone. So there are some technical requirements as well for any zone, and those technical requirements are that the body to wick ratio of the big candles should be more than 70%, and the body to wick ratio of the base candle should be less than 50%. So this supply zone, which you can see this pattern here, is rally, like the price goes up, then base, in which the price moves sideways, and drop. So this is basically rally base drop supply zone. Okay, now let me show you another supply zone in which there is drop, base, and drop. So what is happening here is that market is going bearish, okay, there's big candle, and then there is one base candle, okay, and then again the market went bearish. So there was enough supply and people were selling and sellers were in control. So this zone is also a supply zone because there is one big candle, okay, then there's base candle, and then there's again one big candle, that like this base candle is sandwiched between two big candles. So this is basically a supply zone as well, and this supply zone is drop, base, drop. Okay, now let me explain you about the demand zone and how demand zones are created. So here when we see that the market went bearish or market went down, and then there was the movement of price sideways like the base candle, and then again here there is a one big candle. Okay, so here the sellers were in control and there was more demand than supply, and again the buyers took control of the market and started moving the price upward. So these are two big candles and there is one base candle. So this is also a demand zone, and this demand zone is basically drop because the price dropped here, and then there's base region, and then there's rally region where the price moved upward. There's another type of demand zone, so let me explain that to you. So here you can see that this demand zone, in this the price moved upward, or the market was bullish, okay, and then there was sideways movement, and then again the market remained bullish. So these are two big candles, and there's one base candle in the middle. So this is also a demand zone, because like the supply was not enough, that and buyers were in control, so they kept pushing the market upward. So this is basically a demand zone created here, and you can tell that this is a zone or demand zone because like two big candles are sandwiching one base candle, and this zone is rally, base, and rally, because price was moving up, then and it was moving sideways, and then it kept moving up. So this is basically rally, base, rally. So there's another thing that you need to consider when you are spotting these zones and you're going to trade based on these zones, is that the strength of a supply or demand zone. So there's a technical way through which you can see either a zone is strong or weak, okay. So the strength of a zone depends upon how many number of base candles are there in between two big candles. If the number of base candles are large, the zone is basically weak, and if the number of candles are less, the number of base candles between two big candles are less, then the zone is the strongest one. So here you can see there's only one candle in between two big candles, and this is basically a very strong demand zone, okay. And here there are two base candles in between two big candles, so you see this is also a demand zone, but this is weaker than this strongest demand zone. So this is you can say this is a stronger zone, okay. And here there are three base candles and two big candles which are sandwiching these three base candles. So this is also a demand zone, but this is not very strong demand zone, okay. This is good, this is not the strongest one. So you can tell about a zone is strong or not by looking at number of base candles in between the two big candles, and keep that in mind that this is inversely proportional. The more the number of base candles in between two big candles, the less strong is the zone. So let us understand this through the example on our charts, okay. So let me take you to the chart here, and let me zoom in so that you can see clearly. So here you can see that a supply zone is created, and you can tell that this is a supply zone because there's a bearish candle, and then there's again one big bearish candle, and these two bearish candles are sandwiching one small or base candle. It doesn't matter that the base candle is either bullish or bearish, but it needs to be that like the body to wick ratio is less than 50%, and then there are two big candles which are sandwiching this base candle. So this is basically a supply zone, and this is a very strong supply zone for our 2-hour time frame which we are working on, okay. And if there were more base candles in between these two candles, these two big candles, so this zone would have been weakened. And let me show you another example, okay. So here you can see that there is a demand zone created, and there is one big candle, this one, okay, and another big candle, this one, and then there are some base candles, okay. So these base candles, as you can see, there are a lot of base candles here, and this zone is basically a demand zone, but a weak demand zone. This is not as strong as this supply zone because there are a number of candles in between two big candles. If we look into this zone and we go into smaller time frames, we can spot the big demand zones here but in smaller time frames. So if you go and look into it for like 1 minute time frame, there are small zones created here as well, which are demand zones, and they are strong demand zones. But when we look at it from this perspective and look at it from 2 hours time frame, this is basically a weak demand zone. Okay, let me go here to show you another example. So here you can see there's again a supply zone created here and here, because there is a big candle, this one. Okay, let me zoom in a little bit. So here there's a big candle, then here there's another big candle, and these two big candles are sandwiching these three base candles. Okay, so there's a supply zone created, and here again there's one big candle, and again there's another big candle, and these two big candles are sandwiching these small candles. So this is another supply zone. You can also visit our website www.forexb.co to learn more about price action and forex and get yourself ready to trade. So I hope you liked this video. If you have any questions, please make sure to comment down below, and please make sure to subscribe our channel for future updates and upcoming videos related to forex. Thank you.